Hello, welcome to the European Open briefing for Friday, November the 4th. I'm Rafik Rajian, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we're seeing a bit of a rebound in the US dollar today, and this partial recovery comes ahead of the latest non-farm payrolls report, which is due later in the US session. The rebound comes amid some signs that Clinton appears to be regaining momentum in the polls. She currently has a slim lead against her rival Donald Trump. So the stronger dollar has led to a retreat in the safe havens such as gold and the Swiss franc, but one notable mover since yesterday is sterling. The pound is currently at 1 month high, and this comes after High Court in the UK ruled that the government cannot trigger Article 50 without first having a vote in Parliament. And in other news, we're seeing the Australian dollar in a rather muted response to fairly strong retail sales data, as well as upbeat statement on the economy by the Reserve Bank of Australia. So let's begin with the dollar and what's happening with the US elections. As we said, Hillary Clinton appears to be regaining some momentum after the reports that the FBI has reopened its investigations into the email scandal, and that badly hurt Clinton's appeal against U.S. voters. Donald Trump sharply closed the big lead that Hillary Clinton had prior to the FBI reopening those investigations. Now we're seeing a bit of a rebound for Hillary Clinton, and this has boosted the dollar, and as a result the safe havens appear to be retreating. The US dollar is back near 90.9750 versus the Swiss franc. Gold, on the other hand, although it has fallen slightly, it seems to be holding fairly steady near the 1300 level, and that's also a 1 month high. Now against the yen, we can see that yesterday it had fallen to below the 103 level. It's since recovered slightly and seems to be fairly steady around the 103 level. We had some fairly weak ISM non-manufacturing data. The non-manufacturing PMI fell from 57.1 to 54.8 in October, and that was quite a big miss of expectations of 56.0, although that did have a bit of an impact on the dollar, where prior to that it was on a fairly steady uptrend, and that the weak data capped the dollar's gains. Although later today we do have the non-farm payrolls report, so if we get a strong set of jobs data for the US, that should give the dollar some further boost. The non-farm payrolls for October are forecast to come in at 175,000 versus 156,000 in September. Although given that the US elections are dominating the markets, even if we do see a strong set of data, it might still have much more limited impact on currency markets than usual. Now moving on to the British pound, we can see that we had that big jump yesterday, and it broke above $1.24 for the first time in a month. This comes after the High Court of England and Wales said that the UK government needs an Act of Parliament to trigger Article 50. The UK government has appealed the decision. It's hoping to be successful in overturning the ruling, although if it's not able to do that, it could mean that the government might not be able to go ahead in invoking Article 50 by the end of March 2017. And the reason why the markets are reacting positively to this is because that if MPs are allowed to have a bigger say on the whole Brexit process and the negotiations, it's less likely that there will be a hard Brexit, because MPs would force the government to have greater access to the single market than the government is willing to, because the government at the moment is prioritizing immigration over access to the single market. We also had other developments for the UK. We had some very good services PMI data yesterday, and we also had some upbeat comments by the Bank of England. So all of that gave the pound quite a bit of a boost. The Bank of England has done a bit of U-turn in that after Brexit, it had published some fairly bleak forecast for the UK economy. The UK economy appears to be holding up fairly well for the time being, and the Bank of England, as a result, has revised up its forecast for 2016 and 2017. Although it's saying that because of the impact that the fall in the pound is going to have in pushing up inflation, growth in 2018 may be slower because households will have less money to spend. And then as also the inflation forecasts have been pushed up. So inflation, we saw that already back in September. Inflation jumped to 1%. It's expected to increase to 1.3% towards the end of the year and to 2.7% by the end of 2017. Now the Australian dollar, we can see that it's been steadily rising over the past couple of days, although it's since fallen, even though we had some fairly positive data and positive comments from the Reserve Bank of Australia. It touched a 1-week high of 0.7696 after the release of Australian retail sales, which were up 0.6% month-on-month in September versus forecasts of 0.4%. We also had an upward revision to the August figure. So we really should have seen those gains being extended. We also had the Reserve Bank of Australia saying that we're seeing improved demand from China for commodities which Australia exports, and that should be positive for Australia's terms of trade. So growth in Australia is looking pretty well, and it means that we're less likely to have another rate cut in Australia. So despite those developments, the Aussie has eased back slightly, so that could be down to some profit taking. Let's have a quick look at today's calendar. We've got the final services and composite PMIs out of the Eurozone, but of course the main focus will be on the US non-farm payrolls report, which will include the non-farm payrolls numbers, the unemployment rate, and of course average earnings. We're also going to have employment data out of Canada. So that's it from me. Thank you very much for watching and have a great day.